Welcome to It Depends, a sales tax podcast by TaxConnex. I'm your host, Brian Greer. Sales and use tax can be confusing and very overwhelming, but it doesn't have to be. Whether you work in industry or at a CPA firm, or just someone who wants to stay informed about the latest sales tax laws, we've got you covered. Periodically, we'll explore different aspects of sales tax. So whether you're a tax pro or a novice, tune in and join us as we attempt to simplify the complexity of the sales tax world. This is It Depends, because with sales tax, there's rarely just one answer, and often that's our answer to many questions. It just depends.
The first thing I'm going to talk about is nexus. It is really a very commonly misunderstood concept when we're talking to people, especially people new to sales and transactions tax. There's a lot of misconceptions and misunderstandings. So hopefully we can clear up a couple of those. The concept of nexus has really been determined and driven by the Supreme Court. The most recent decision, Wayfair, created a quantifiable basis for determining nexus, really saying based on the number of transactions or the volume of tax or revenue activity you have in a state is going to determine whether you have economic nexus. For the most part, it did create some simplification, at least some clarity, and most of the states, if not all at this point, have legislation that specifically defines what creates nexus in their state relative to transactions and revenue volume. But the common misunderstanding is that economic nexus replaced the decades-long physical nexus standards that have existed on the books, again, from a Supreme Court case. Physical nexus is still a factor. So even if you don't have economic nexus in a state, it's not impossible for you to have physical nexus. And physical nexus involves offices, people, activities like attendance at a trade show multiple times a year in a state, even if you don't meet the revenue thresholds in that state. Physical nexus is still a possibility for you. So it's something that can't be ignored. Now, for the most part, if you're a SaaS company, and you have a single location, economic nexus is going to usually be your primary driver. But if you have a more another type of business and SaaS is just an element of it, you will want to consider physical nexus as a possibility. And then the third nexus that is really commonly misunderstood is what I call telecom nexus. If you provide telecom services, the idea of physical or economic nexus kind of goes out the door. Telecom nexus says if you have a customer in a state, you have to collect taxes in that state for that customers. And the principle there is communications revenue is dependent on so much plant that exists throughout the country, the infrastructure associated with providing telecommunications services. Telephone poles, cables, wires, towers, etc. And a customer has to have access to that infrastructure in order to have service, which means as a telecom carrier, you need to collect the taxes in those states for those against those customers. So if you have a telecommunications service, you really need to ignore the physical and economic nexus and plan to begin collecting taxes based on where you have customers. The next big issue is once you know where your nexus is, where you have a responsibility to collect tax, then you need to determine what you're selling and how taxes should be applied to what you're selling. And there's a lot of confusion that exists here as well, primarily because the rules differ so dramatically or can differ so dramatically state to state. Well, one state might consider a non-taxable service, another state might consider a taxable service. So you have to really understand very specifically what you're providing. What I mean by specifically is, are you charging for shipping? Are you charging for installation? How are those charges? How is installation being handled? Are you doing it with your employees or with contractors? How is it presented on the invoice? So all those things have to be considered when trying to determine the taxability of your products and services. And the other thing is, if you're going to collect taxes, you're most likely going to have to license a tax calculation service like Saratax. And in order to integrate with Saratax and other telecom or other calc providers, you have to be able to translate or map your service types to the tax code types by the calc service provider. And there's thousands of options. So you have to be very precise and very meticulous when you're doing that mapping. And of course, the more knowledge you have, the more successful you're going to be with the mapping. And don't make assumptions about how you think that mapping is going to turn out. Test it so that the results you expect to get relative to taxation actually occur based on your choices. The other thing you have to manage with tax calc systems is exempt customers. The systems can generally determine exempt services and products, but you have to determine whether or not your customer is exempt, and you have to manage that. And a customer just telling you they're exempt isn't really sufficient documentation for you. You're going to have to get documents from them that validate that they're exempt customers, so you can flip the appropriate switches in the calc engine and not have taxes calculated. So, and not only knowing about your products and services, how you're providing it, but also you need to know the tax status of your customers. And so that's something you may have to ask them proactively. Otherwise, what you'll find is they'll short pay invoices and they won't pay your taxes, and it'll take you a few months of invoicing and on collection of the full balance of their accounts before you realize they're not paying the taxes and why. And then you have to deal with tax credits and refunds and things of that nature possibly. So it's best to get that handled up front. So the more facts you have, the better off you're going to be relative to determining the taxability of your products and services. And don't make any assumptions. Too many times I hear software is not subject to tax. SaaS specifically is taxable in, I believe, 23 states currently. So SaaS is definitely a taxable service that you're going to have to consider as you develop your mappings. This is another thing that you wouldn't think would be a problem, but it is, because it goes back to what are you selling? I mean, we recently, actually this week, talked with a prospect that came to us as a SaaS business. They were convinced they provided a SaaS service. But as we drilled down on the products and services that they were offering, they were actually a telecom company. And telecom, of course, runs on computers and software and some SaaS applications. But it doesn't mean just because it runs on a SaaS application, it should be taxed as a SaaS service if the customer specifically believes they're going to be receiving something else. So if your customer is receiving a basic communication service, text, voicemail, even if they don't have access for or direct dial or that sort of thing, doesn't mean they're not a communications company with communications tax issues. So that's a big thing that we see today, is too many people want to categorize themselves as something they're not, just to be consistent with how they believe they're marketing themselves. This can get you in real trouble and result in the over-under collection of tax. One thing we see a lot in telecom, because everything is bundled today, everybody likes a one charge that fits all possible services that they're going to enjoy. But when you have bundles that include many taxable and non-taxable services, you've got to have a way of managing that from a tax perspective, because it's not going to be good for your customer to charge a tax on the entire bundle if it's possible to break it down and reduce that customer's tax burden. It'll also help you in the marketplace to keep your prices down, your costs down relative to what your competitors are doing. So managing the bundles is a big issue for you. And I believe, Kelly, you have some experience with that at Ceratax, correct?
Yeah, Robert, thanks for asking. We certainly do. One of the unique things and complexities around bundles is that they're taxed differently on certain products. A common example might be, a fruit basket mixed with a few other things. I know sometimes there's flowers or there's candy or there's bread or whatever it might be that's incorporated with that gift basket. And so each one of those different products has a different taxability, and each state has kind of determined how those bundled items or bundled packages would be taxed. Some states are going to say, we're going to do an allocation or apportionment of those transactions or the products and say, well, 52% of it is taxable. And so you would only charge tax on that portion of it. So if it's a $20 transaction, only a little over $10 of it would be taxable. And you need to be able to have a software that's capable of handling that calculation and the apportionment of it as well. But some states are going to say, well, only 13% of it is taxable. And so they're going to have different rules and settings for that. And each state's very different, and it's a very complex area where many businesses that don't think about the complexities of a bundled package or service or product that they're selling can have drastic tax impacts down the road. Other familiar areas where I've seen improper handling of transactions and bundle packages. There is a recent news article of a Skims class action lawsuit where the underlying assumption of the taxability of their product, they didn't think it was subject to tax or vice versa. And there was a lot of assessments that ended up being incurred by that business because of these different scenarios of misclassifying the taxability of a product, taking in assumption or not handling the correct bundle transaction and breakdown of that. All those things are very important to be able to handle correctly, and kind of leads us into the next main category I think that we should cover, which is going to be around exemption certificates. I guess, Robert, would a background of exemption certificates, do you think, be helpful?
Yeah, I think it probably would. I probably should have thought of that myself, but yeah, go ahead.
Yeah, exemption certificate is really where when a normal transaction would be subject to sales tax, but for some reason it is not. Sometimes a very common exemption certificate is a resale certificate where the company that is buying the product or service can handle a resale certificate, in particular, or exemption certificate, and say, I don't have to pay tax because of this particular reason. And there will be certain laws that have been established that say you don't have to pay tax, whether you're a nonprofit or an education facility, or if you're reselling the product or service. These are all different pieces of paperwork that the business that made the transaction has to keep on record in order to, if audited, prove why they didn't charge and collect or remit sales tax on these transactions. And so this is a key area where if they are not handling exemption certificate correctly, and they don't have good processes in place to make sure they do that, it's a huge potential liability that these businesses can have. Anything you'd like to add to that, Robert?
No, it is a big issue, and it can be an expensive one if it's not managed well. From a vendor perspective, I have a client that was submitting exemption certificates to their carriers, they're a telecom company, expecting to have taxes no longer included on the invoices, but the invoices kept coming with taxes even after the submission of the exemption certificates. And what they realized after digging in is their agreement with the carrier was not that of a reseller. So they didn't have the type of arrangement with the carrier that would even allow utilization of the exemption certificates. So they've been paying the taxes to the carriers and collecting 100% of the tax from their customers. So in that case, the exemption certificates didn't provide the benefit that they expected it to. So you have to understand the business relationship you have when utilizing the exemption certificates as well, because they have to, it's a very specific and precise requirement relative to the exemption certificates and has to be managed well.
Robert, that's a great point. And to expand further on these exemption certificates, not only make sure it's the right certificate for that type of transaction and the exemption applies, but a very common area where companies don't have another good process in place is that some of these certificates expire. Sometimes, like the Florida resale certificate, you have to get a new one every single year. Other states, by certain exemption types, they expire every 2 years, 3 years, or 5 years. In fact, some, they don't ever expire. And so these are different processes that need to be established to make sure that not only one, you have the correct exemption certificate, two, that's filled out correctly, and then three, making sure that you have processes in place to track for the renewal of those. This is where a product like our Smart Exempt solution really comes into play here to, one, help collect the certificate from your customer, help make sure it's the right certificate, and then tracks it for the renewal process to make sure that this exposure is eliminated. And it's a great process to be able to really make sure that is all taken care of and lined up. Anything you'd like to add to that, Robert?
Well, you brought up a really good point relative to the process in its entirety. The exemption certificates expire, so they have to be managed. I have found in way too many cases in my client base where people tend to put their entire sales tax process on autopilot, including the mapping of their products and the tax determination, that it's a one and done type thing. And it just doesn't work that way. There's too many changes that are occurring in your businesses every day that could potentially have a tax impact. So these things like exemption certificates, taxability tables, nexus, they all have to be reviewed periodically throughout the year. You just can't put them on autopilot and work in a dynamic changing environment. You're just adding risk to your business.
Robert, on this slide here, I think this is a really important one to point out, is lots of businesses, when they first get into business, don't really think about, the sales tax complexities, the tax compliance side of going and starting a business. And when they choose a billing platform, whether that is, e-com brand that's using Shopify or WooCommerce or BigCommerce, something like that, or maybe you're starting out with QuickBooks Online or another type of platform, say like Realit, is that a lot of these billing platforms are not set up to be experts in sales tax and sales tax compliance. And a lot of the nuances that states have established, people aren't aware of. Certain things like ship to, ship from, the sourcing rule of the transaction. When a transaction happens, does that transaction happen in, say, where the product came from or where the product was delivered to? Some states have different logic to that, where a majority of transactions use what's called destination-based logic, where the product is used or arrived is where that transaction will be located to and who gets the tax revenue from that transaction. But that's not the case in all states. In some locations, California is a great example, where they have different logic depending on if it's city to city or county to county, if it stays within the county or if it is different counties. Sometimes it will use the origination, where the transaction originally came from, the product came from, as the source of who gets that tax revenue and what tax rate to use. And so these are complex situations that a lot of these basics billing platforms are not always set up to be able to handle. And so these are things that if you don't know about it and you don't set it up ahead of time, can really come back and hurt the business down the road. And this is where a company like TaxConnect comes in perfectly as an advisor to really sit down, analyze these things, and to really make sure that the business has it set up correctly. If you want to expand on that, Robert.
Yeah, we've had a couple of situations where clients have either converted to or set up for the first time a tax calculation system, and without proper time, they deployed way too soon, and as a result had overcollection of tax in some cases, dramatic undercollection of tax, just because not that the calc system isn't working properly, but the integration of the calc system didn't consider all the nuances and components of their ERP, their purchasing process, how customer care worked. So it's really got to be evaluated and tested very carefully. There's a lot of moving parts, and it can't be rushed. If it is, you're going to pay for it. And it's much more difficult to make changes when you're having to process invoices in real time or on some other monthly schedule. So it's best to invest the time up front and getting it right and doing the testing, getting the professionals involved if necessary to do that testing and setup.
Absolutely. Robert, if we expand here on this part of not only making sure that all the systems line up correctly, this is a big relationship where SareTax and TaxConnex come in and we fit in very, very well together. Lots of times between a tax engine, a billing platform, and going from filings, there's a lot of chances that not everything always lines up. And this is really where TaxConnect can come in and cross the T's, dot the I's, and make sure everything is aligned and makes sense. Can you expand kind of the unique role that TaxConnect plays in this area?
Yes. One of the things we see a lot, and as an accountant myself, it's a little frustrating, frankly, but the sales tax liability account on the balance sheet is your best control to make sure that what you're billing and collecting is getting properly reported and paid. We've had a number of situations where clients haven't reconciled their sales tax payable account, and it kept growing and kept growing and kept growing and didn't line up with the payment process. Well, that's because they were providing us output that did not include all the transactions that were actually being invoiced. And so there was months of taxes that had to go out on later returns. And that type of situation can be avoided if the liability account is reconciled monthly. It can identify a lot of those issues. And that's one area where TaxConnex can assist, because we want our reporting that we provide our clients on a monthly basis to reconcile back to the tax liability accounts, because it's a great first line of defense for identifying any potential issues.
Well, and Robert, to expand on that, it's a very unique thing that this relationship between SareTax and TaxConnect plays a great role in. Is there's other tax engines out on the market that will simply, do the transaction, put the numbers up, and then file the returns. And there's really no analysis or review or professional CPA or anyone like that that's look at these numbers. And if someone's not necessarily aware of what to look at, they don't know that they might be setting a red flag strictly to the state to say, come audit me, these numbers don't look right. And it's just not something that people are very aware of. And so having a professional like TaxConnect on your corner is really going to come into play here and make sure that your business is protected and everything looks good and there is no red flags you're sending to the state when you're filing your sales tax return.
Yes, and I appreciate the plug.
No problem. It's one that is well deserved in that reason. So I think this one is a little bit more up my alley here. When tax rates and rules aren't really syncing across different systems. And I think there's multiple ways that this can be a cause of concern. I've seen some platforms or some businesses use different tax solutions, right? They might use one platform for their e-com website and then one for their ERP. And when those two systems don't line up, it creates a nightmare behind the scenes. So having one platform or one tax engine like SareTax to calculate tax in all locations is really going to make sure that everything is consistent. The rates that are being calculated are consistent, and there's no difference of opinion. And when you integrate this tax solution within all your different platforms and solutions that you build from, it really makes sure that it's a streamlined process that flows correctly. And as things like tax rates change, taxability changes, it really gives you the ability to be able to make sure everything is aligned. If you don't use a sales tax software, then you're left up as the business owner to maintain what the tax rates are across the different tax jurisdictions that you have nexus in and are collecting and sales tax. Also, you have to stay on top of all the sales tax changes and the taxability. If all of a sudden, I think it was Maryland recently changed that SaaS was going to be taxable. Those don't happen every single day. And if you're not staying on top of what your product is being taxability wise, on top of all the other responsibilities you have, this is why companies and businesses purchase sales tax software like SareTax in order to make sure all this is synced together and there's no differences across the different platforms that they're building in.
Yeah, and when you have multiple platforms as a tax return preparer, it's significantly more difficult to combine the two different platform outputs into a return. So a single source, as Kelly said, would make the filing process a lot more efficient for you as well. Also, I don't deal with any of the taxability, but I deal with all the rate changes, and they're overwhelming. So there's something that, as Kelly said, occur very frequently, and they have to be managed. And if they're ignored, you potentially miss something that's going to create an underpayment of tax and potentially a customer problem. So it is a big deal.
Robert, to expand on that, I mean, we just had a customer ask, what rate changes happened across, the U.S. here in March, for March 1st, and we have over 1,500 different rate changes within our system that were updated, and so that's a huge amount that any business has to try to stay on top of, and it's almost impossible if you don't have a dedicated tax department and manpower in order to do that. And that's where companies would rely on a software like ours to do that.
Yeah, that's the value in licensing it to SareTax. Somebody else thinking about those very important elements every day. I think this is for me, Kelly. This is about return filing.
Definitely.
We've talked a lot about what we would refer to as the front end aspect of sales tax, which is getting the tax calculated accurately, billed properly, and then collected from your customer. But once it's collected, you have a responsibility to pay it to the jurisdiction. You're a tax collection agent. So you don't want to hold on to the tax dollars as a source of cash. So you've got to get it paid. Unfortunately, we talked about the complexity of the tax rules in the various states and the 1,500 rate changes in March alone. The same thing does apply at the return level. It's very different state to state. The reporting requirements vary, and you have to be able to efficiently process the data every month to meet the deadlines. And with sales tax, all the deadlines are generally monthly. It's not like income tax where you have one annual return and maybe 4 quarterly estimated payments. You're making your tax payments monthly. And if you have a high volume of tax dollars, the states have prepayment requirements for sales tax as well. That surprises a lot of people, but it just shows you that the states want and expect their funds from you as their tax collection officer as quickly as you can get it. If you're doing business throughout the country. You have to deal with the 50 states. You're going to have a process, a very good process in place to manage it effectively, maintaining the filing frequencies. Some are going to be monthly, some will be quarterly, some may be less. Unfortunately, every form looks different. Some may be simple, report everything as one number. Others may make you break it out basically by street address, which is what happens in Missouri. And then you have states like Colorado that allow their cities, some of their cities, to administer and collect their own sales tax. So your volume of sales tax returns isn't going to be 50. It's most likely going to be about 150 to 200 if you're a general sales and use tax filer. Now, if you're a telecom company, in addition to sales tax, you're also collecting a lot of specialty taxes unique to telecom, utility users, license taxes, E911 fees, and your average monthly return filing is going to be a bit more like 400 and 450 returns. So it can be a very big burden depending on the type of business you're in and your geography. What's your sales tax footprint? And so managing the return process takes effort, or outsource it to somebody like me. Yes, Kelly.
Robert, I was going to say 400 or 450 returns a month sounds like a complete nightmare. That is a lot of returns specific to the telecom industry. And just like you said, even 150 returns a year for a business that's handling sales tax, that's not something that anyone probably goes into starting a business or growing in their business is thinking that it's going to turn into such a burden. Because that just sounds like a crazy nightmare, and really where it makes complete sense to find a company like TaxConnex to really be able to handle that compliance and be able to take that off their plate.
Yeah, and you can find solutions that will basically get the data on a return for you, but they hold you responsible for managing the tax calendar. So you have to keep up with the filing frequency changes. If there's a notice that accompanies the return that they filed, you have to answer the notice. And so there's different scopes of service available to you, and TaxConnex is a full service because we want to take the entire burden away from our customers. And I can tell you, we get probably 25,000 pieces of mail a month that we just have to go through and sift, assign to the various clients, throw away what's nonsense. So that takes people, resources, time. So that's just part of what happens when you're sending returns to the 50 states. You're on their mailing list, and it can be overwhelming if you let it sit. One thing I like to prepare my clients for is an audit. I hope none of them are ever audited, but it's something you have to plan for from the perspective of making sure you have easy access to your books and records that are pertinent to your sales tax calculations, the assumptions you made, and setting up the tax calc engine. What were your allocations? What were those allocations based off of? How are your tax rates updated every month? How's the system maintained? And then have work papers associated. Keep your data file someplace attributable to the month related to the filings so that you can access it quickly when an auditor comes. Because the less time you have to spend gathering data, the more time you can spend managing the auditor and helping navigate what the auditor looks at. Because you don't want him digging too deep oftentimes. You want to set him on the path that shows how compliant you're being, not the areas where there could potentially be risk. And if you're having to spend all your time looking for records, validating what you did, it's going to distract from the more value-added aspects of audit management. So prepare for it. Don't wait for it to happen, because you're going to find, especially with the turnover of people, someone that was 3 years ago prepared the return is probably gone from the business, and you want to be sure you have access to what they did, their activities while they were preparing and filing the returns on your behalf. So make sure you're storing it. Statute of limitations in most cases is 3 to 4 years. Make sure you're storing the records for at least that long. There's things you can do to prepare for an audit and hope you never have to use it.
Robert, I think that's a great point of all those things that you do to prepare for an audit. If you don't mind me putting, 2 sentences in about SareTax and how SareTax can help with an audit as well. On top of that is when it comes to a transaction, one thing that SareTax does that's very unique is we give you all the proof that you need to why the tax rate is the correct tax rate, or why in the laws the software saying that transaction was subject to sales tax, or why it was exempt. And so that gives you, steps and bounds above other tax engines on the market today to help prepare you under an audit to make sure that the transactions are correct when questioned by an auditor. So,
no, it's a very good point. And most tax decisions are not black and white. Providers like you, SareTax, and others, they make the best judgment calls they can based on the facts available, and so it's not as simple as people would like to make it out to be.
Yeah, absolutely, and I think that's why we make such a great partnership here, where the two of us kind of go like peanut butter and jelly. It makes a great sandwich. Hopefully, you all like peanut butter and jelly. I love it, at least.
Okay, great. Thank you, guys. I'm going to go ahead and pull up a poll question here. Just wondering if you guys are interested in learning more about our services. We'd love to follow up with you if that's the case. And then while we wait on some responses there, we do have a couple questions here in the questions box. Jeff was wondering, we have clients that are asking us to bill for AI services. Are there any tax or fee requirements that we need to understand? I know that's pretty nuanced, but.
Yeah, and I am not up on the taxability of AI services. Are you, Kelly? Is that something you can address?
I do keep tabs on it. So far, I think one of the unique things that, I've been doing this for about 10 years, just trying to stay up to tabs on everything, is government agencies are very delayed in coming out with new taxability rules for new products and services. I know when digital currency, like the tokens, when my kid would go spend $20 on Fortnite, that $20 was considered taxable or not, and the gifts and all those types of things involved in that. States were about 5 years or so delayed and really kind of coming to a ruling of that. So I believe one state, if I can recall correctly, has just recently put out, I think it was a letter ruling around AI. I can't think of who it was off the top of my head, but for majority of states, they have not ruled as to the specific taxability of AI. And most businesses, from my understanding, are treating it as a software as a service currently, but that's where your expertise would come in, Robert.
Yeah, I don't know if we have any AI services clients, so I don't know how they are taxing their services, if they're taxing at all. I know we've purchased some AI services, and I don't believe we're paying tax on them, but that could be because we're in Georgia. So I wish we could provide more information. Can we follow up with Jeff, because I can get our Jeff to look into that.
Yeah,
definitely.
Okay. We'll follow up with you on that. And then one more question here. Do either companies use AI in the services provided? TaxConnex and SareTax.
We use it. At this point, we're using it a lot for the jurisdiction notice management, just because it's one of those functions that's very repeatable. We get mail, we scan the mail, the AI reads the fields in the mail and then distributes it accordingly. So that has been a big help. We're trying to use it in other areas of the business too, but it's got to be in similar processes that don't require a lot of judgment at this point. But we're doing it in notice management. How about you, Kelly?
Yeah, we have a lot of great, exciting things on the horizon coming to AI and how it can help in automating sales tax and doing more accurately for businesses. I don't know if I can spill all the beans exactly what we're doing as of today, though. We do have it in some of the content that we are growing, and then we do have our own attorneys and lawyers and CPAs that are reviewing that and ensuring the quality of our AI. But there's a lot of training and things that are on the horizon, since the unique thing about SareTax is that we research and maintain our own content. We don't data scrape it from others or from outside sources. And so we can ensure the quality of our taxability of our content and our rates. And then we look forward to using our AI to be able to come to those tax decisions and look for ways to help save our customers money, as well as make it more accurate for them in their taxability. So we have a lot of great things coming on the horizon in our process for our customers.
Sounds exciting.
Okay, well, thank you, everybody. We really enjoyed this session. We'll be sure to follow up with anyone who asked a question that we felt was better up over email. Feel free to reach out to this email if you have any questions for afterwards, but we appreciate everyone's time. Have a good one.
Thank you.
Thanks.